With Labor being elected, we're going to look at some of the changes that have occurred for the first home buyers and what this means for them, and go through some of the schemes and what we can do to help you get into the market today.
How you can save a deposit quicker is that there is one more scheme which is called the First Home Super Saver Scheme. What that allows you to do is that...
What about those that are struggling to save a deposit in the first place? How can they, well, what can they do essentially? Welcome back everyone to the Finance Matters podcast. It's Adrian and Rahul. Today we have a very special guest. We have the owner and director of the Lenders Club and one of the top female brokers in all of Australia, Mrs. Dana Blewitt. So welcome today.
Thank you.
Yes, so Dana is not only the director of the firm, she is also our mentor. So anything that we learned about Finance Matters has come from her. So thanks a lot for joining us, Dana.
Thanks for having me, guys.
All right.
And the topic for today is first home buyers.
Okay.
How, as a first home buyer, you can get into the property market easily, and what are the changes happening around the first home buyer schemes. So Dana, why don't you start with us? What's happening today?
With Labor being elected, we're going to look at some of the changes that have occurred for the first home buyers and what this means for them, and go through some of the schemes and what we can do to help you get into the market today.
Yes. So the changes that you mentioned, what are those changes? Can you just give us a small brief intro of that?
So currently, as of today, we have stamp duty exemption in New South Wales, which allows first home buyers to not pay stamp duty up to $650,000. And then it is on a sliding scale from $650 to $800, where at $800 you are then paying stamp duty again. There is also the option to pay property tax from 800 to 1.5 mil. So you can either opt in to pay stamp duty or pay the property tax. Now with Labor being elected, the changes are where this property tax option has been removed, and you will not pay stamp duty for up to $800,000, and it will be on a sliding scale from 800 up to 1 million.
So the scheme that is ending is first home buyer choice, and that scheme is going to end on 1st of July because Labor are making the changes in this policy. So what that will mean is that obviously
So if you want to look at taking advantage of the first home buyer choice, you need to sign a contract before the 1st of July. It will actually go off contract date, not settlement date. So you have the next few months, if you are looking to take advantage of this, to sign a contract.
Gives you a little bit of extra time there if you sign up first.
Yeah.
Perfect. All right.
And then that means that eligible purchases up to 800,000 will be exempt from stamp duty. And from 800,000 to up to $1 million, there will be discounted stamp duty.
Yeah, exactly right.
So that also means that because of the price points that we're looking in Sydney currently, that apartments, townhouses and villas, because those are the things you can buy in that price range mostly, could potentially be on the uprise.
But Rahul, with the coming to an end of the first home buyer's choice, with clients or first home buyers having to pay stamp duty again, doesn't that make it harder for them to get into the market in the first place?
That is true. It is hard enough with the price points and with the interest rates going up for first home buyers to get into the market. And with this scheme not being around anymore, that means they will have to save a little bit more deposit for the stamp duty, which could be about $50,000-$60,000 more in savings.
Yeah.
So what we are going to do today is how we can make it easier for the first home buyers to get into the property market. So, Dana, why don't you give some insights on that?
So one option is the first home buyer scheme, which allows a first home buyer to purchase a property with just a 5% deposit and not pay mortgage insurance. The government guarantees the other 15% so that the banks don't have to charge mortgage insurance.
Yeah, and there are like 35,000 spots each year. This year there were 35,000 spots allotted to first home buyers, and there were certain participating lenders which you can do that with
So remember, not all lenders will accept the first-home buyers, but like you said, Rahul, there are a specific few that will accept these places.
And there's also eligibility criteria for that.
Of course.
We can put the eligibility criteria because there are a few points in each scheme. So what we will do is that we will put each scheme and the eligibility, depending on the state, in the description of the post, or we will just link to the post which we have put in our group. And then obviously, other than that, what if you are not eligible for one of these schemes? What can we do for
So
that?
if you're not eligible, we still have access to products where you can actually borrow up to 99% of the purchase price at a number of different lenders. So you can still access the market with a small deposit. You don't have to save the 20% deposit.
Okay.
However, you will incur the mortgage insurance.
So you still have to pay the LMI because the deposit's smaller.
Yes,
Okay.
if you don't qualify for the scheme and you're borrowing above the 80% LVR, then you would have to pay lender's mortgage insurance.
I still think there's a select few people that would be happy to do that, to get into the market and possibly get their dream home. So, I mean, different options, especially with the choice closing, we can see that there are still ways to get into the market with this tiny deposit.
When you set up, you can borrow up to 99%. Does it mean that the buyer will also need only 1% deposit? How will that work?
No, they will still require a 5% deposit.
Okay.
And then mortgage insurance will be capitalised on top of the loan, and your end loan to value ratio will be 99% of the purchase price in some cases.
So it's still a 5%.
Yeah, so basically, like if you're buying a $1 million property, you will need $50,000 deposit, but that will also capitalize LMI into the loan amount.
Yeah.
So essentially, you just need $10,000 deposit plus $40,000 in LMI. Roughly speaking, those would be the figures.
And you then need your stamp duty.
Stamp duty, or if you can opt for the scheme before that, before 1st of July, you can also pay the annual property tax until then. So what are the other ways to get into the property market?
Well, there are guarantor loans, which Dana has done plenty of them, and she's going to discuss it a little bit further. So Dana, what is a guarantor loan and what does it do for someone trying to enter the market for the first time?
So a guarantor loan allows you to enter the market basically with no deposit. So you can use a direct family member, so for example, a mum or a dad or a grandparent, and use the existing equity in their property as the deposit for your purchase.
Okay.
So normally the guarantee is 20%, so cover the 20% deposit so that you don't incur the mortgage insurance. It can also cover stamp duty, legals, and government fees and charges. So you are not required to put any deposit down.
Okay, but what about servicing? So does the client have to service only their portion and the deposit? Or how does that work?
Yeah, so basically the guarantors, they're not required to put in any cash, or they're not required to service the loan. Okay. So the person going for the loan is required to service the entire loan at that bank. So you are borrowing 100% of the property purchase price plus costs, and you are making repayments on that full loan amount. It is important, though, that the guarantors understand their obligations under a guarantor loan. However, in general, we are finding that once the property has been reduced down to 80% or the value of the property has increased, where your now loan to value ratio is 80% of the purchase price, we then discharge the parents or guarantor of the loan, and the property is now standing on its own. We have found in the past this has generally taken around 3 to 4 years in general.
Okay, interesting. So they're essentially borrowing their deposit from their parents, essentially.
So basically, we don't need any savings to get in the property market as long as there is a parent or a grandparent who has some sort of property or a security which we can use.
Sounds like what she's saying, 0% deposit, zero money saved.
Can that be only a parent or a grandparent, or can it also be some other relative, some other friend who can be a guarantor?
The banks do like a direct relative, but there are lenders that will allow like a cousin or an auntie or an uncle to be.
A brother or sister?
Yes,
as well?
brothers, sisters,
Okay.
definitely.
That's pretty
Just
good.
case by case,
Yeah.
essentially.
Yeah.
Okay. Very interesting to know. Some people may have parents with a bunch of properties, access to some equity, and that may be able to help them get into the market a lot sooner. So, look, thanks, Dana, for giving our people that insight.
Yes, and as first-home buyers, what you said about servicing. So the borrowing capacity is again an issue with a lot of first-home buyers.
Especially in this climate, look at the rates.
Exactly. What do you do about that? We do have another podcast, another episode of how you can increase your borrowing capacity, but something on the same lines. You as a first-home buyer or as a buyer, what you can do is that you can opt for a longer-term loans. So what it means is that there are several lenders who will allow you to have a loan term of 35 years or 40 years, as opposed to just a normal 30-year loan term. So because you have that extended term to repay your loan, that increases your borrowing capacity. And
Also
that
reduces your repayments as well.
Yes. So as a buyer, if you're not able to have that service, that debt with the traditional lenders, you can look at other lenders who allow you to do that.
So, Rahul, you touched on servicing for the client, but what about those that are struggling to save a deposit in the first place? How can they, or what can they do essentially?
Yeah, that is a good point, because borrowing or taking a loan is just one part of this. The other part is deposit or your savings. So how you can save a deposit quicker is that there is one more scheme which is called the First Home Super Saver Scheme. What that allows you to do is that you can make additional pre-tax deductions, which are also called your voluntary contributions to your superannuation.
Okay.
Now, when you do that, your super is taxed at a lower rate compared to what your personal income is taxed on. So that tax savings can be about 15 to 20%. Speak to your accountant more about that. How much would it mean for you? But on an average, it could be 15 to 20%, which you can save much faster.
Okay.
So by doing that, you can use those additional contributions towards your deposit under this scheme, which is only for first-home buyers.
So is there like a limit to how much a client can contribute into their super?
Yeah, so up to in each year, you can do additional contributions of $15,000 per year.
Okay.
And the total of that should be under $50,000 in total.
And then that can be redrawn out of the fund only
For deposit.
Okay, but only what you've
Additionally.
put in, the additional.
Yeah,
So you can't take voluntary.
You can take out only voluntary, not the mandatory contributions.
Okay.
So what your employer, 10.5% or whatever your mandatory contributions are,
Can't touch
we
them.
cannot touch that.
Okay.
Only the ones which are making additionally towards that.
Okay, perfect. Beautiful. Okay, cool. Well, that's another way to get into the market. Well, that concludes all the schemes and how to get into the market. So thanks for your input and also thanks to our special guest, Dana.
Thanks, Dana.
Thanks for having me.
No problem. And we'll see you guys next time. Thanks for tuning in.